What's up, all you cool cats and kittens? If you guys haven't watched Tiger King yet on Netflix, you're welcome. You need to download Netflix and watch it. It is hilarious. There's all sorts of different people out there. Man, Tiger King, gotta watch it. It's so funny. I got a nice shower today. I'm still going on strong with my pandemic beard here. A lot more white in there than I thought. But my hair is getting pretty long. I don't even really know what to do with it. I'm pretty excited about today's video. I want to share with you 4 pages that change my financial life. These 4 pages, that's it. One book, 4 pages in Tony Robbins' book, Unshakeable. So I want to share that with you. So if you guys got a little bit of time, a little bit of energy today, come with me, let's get after it. Here we go. So nice to see everyone putting out their good wishes to all the men and women working at the hospitals right now, all the paramedics and the police officers. It's just all hands on deck right now. It is just, what a time to be living. This is just craziness. I just got word I got another commission check waiting for me in my mailbox. Could all use the extra money during this crisis. Let's go get it. Usually hustling and bustling. Slow. Yes. A little bit helps right now. Let's go put this in the back. Hey guys, welcome back to my channel. This is Get Ahead Finance. My name's Adam. Thank you so much for tuning in. If you're new here, please drop a like and subscribe if this brings you any value whatsoever. So in today's video, I'm really excited to talk to you about this. The other day, I went for a walk and I came up with a bunch of things to do while in quarantine. And one of the things was to read some self-help books. I went back into my little library. I had about 3 books that I really liked. And I wanted to refresh some of the information I was getting out of these books. And today's video is about one of those books. Not only just one of them, but 4 pages from that book is never more important than it is right now. So without further ado, I'd like to introduce to you the book that I'm talking about, which is Unshakeable by Tony Robbins. Now, the weird thing about this, I picked up the book. It was bookmarked to the exact 4 pages that I'm going to be talking to you guys about today. So if there's anything that you guys can get from this book, don't worry about going to buy it. These 4 pages and this summary that I'm going to give you is all that you need to take away. There's no better time than right now to get this information to you guys. So please listen up, grab a pen and paper. This is very simple stuff, but it is absolutely crucial. I can't believe we just stumbled upon it. So here we go. I'll even give you guys the pages. Page 39, 40, 41, and 43. Now what's important on these pages are these charts. So while I'm talking, I'll throw up some of the charts as we go. The biggest chart I'd like to bring up is the number of bear markets we've had over the past 70 years. In the past, or probably 80 years now, in the past 80 years, we've had 14 bear markets. In those bear markets, we've seen drops of 20, 30, 40, 57.6% in the last bear market, which was the financial crisis. Now, what's important about this chart is the number of days in length for each bear market, which is pretty interesting. Usually, they're in the hundreds. So 357 days, 240 days, 694 days, 100 days. Usually they last from about 1.5 months to about 2 years. But on average, a bear market only lasts about a year. So that's a huge tip. Tip number 1, bear markets last about a year. So you're probably asking yourself, so what is the average drop in those 14 bear markets? Well, the average is pretty simple. The average drop in these last 14 bear markets was 30.52%, which is kind of interesting because right now, the current highs we've had in this market of 29,568 points to the low, which is 18,213 points. That's a drop of 38.4%. So a lot of investors right now, as soon as the market hits that negative 30%, they start what they call dipping their toes into the market. The reason some of these investors are dipping their toes into the market right now is because they know this information about the bear markets. Of the past 14 bear markets, only 6 have had drops of 30% or more, and only 2 have had drops more significant than the 38.4% we're currently in right now. So, could it get any worse is what some of these investors are thinking. The odds are we're probably getting close to the bottom, if not already at the bottom. Now, some of you may remember the financial crisis we had back in 2008. Do you remember the panic and the news headlines and how crazy that time was? That bear market dropped 57.6%. That is the biggest drop in these 14 bear markets, was the last recession. So there's a lot of, short-term memories in regards to the market and how to invest. A lot of people remember that pretty well, and they were hit pretty hard. So in this bear market, we're going to see a lot of people scared and not know what to do. What a lot of people don't really talk about was March 9th, 2009, we hit that rock bottom. And what happened after that rock bottom? Over the next 12 months, the market went up 69.5% in 12 months. We need to keep a level head when we're talking about investing in the stock market. One of the things that a lot of people forget is that after a bear market comes a bull market, usually within about a year or so. On page 40 of Tony Robbins' Unshakeable, we see another really important chart. This is the percent the market has gone up when the market has hit the absolute bottom of the bear market. Now, the average of all these averages after bear markets turns out to be 39.04% over the next 12 months. Pretty impressive stuff. 1 year, imagine getting 39% on your dollar. That's incredible. This is where we like to bring up quotes from guys like Warren Buffett who say things like, be fearful when everyone is greedy, and greedy when everyone is fearful. Okay, so on page 43 is another chart I want to bring to your attention. So Schwab Center for Financial Research put together a pretty good little study here. From 1996 to 2015, the S&P 500 returned an average of 8.2%. Pretty good. But if you missed the 10 biggest trading days, you would have seen that 8.2% turn into half, about 4.5%. If you missed the 20 biggest trading days during that 20-year period, your investment will go down to 2.1%. If you missed the biggest 30 days, guess what? You made zero money. And if you missed the biggest 40 days, you actually made negative 2%. So this is the biggest reason. This is the catch of all of these financial gurus here. It pays to be in the market, and it pays to be in the market all the time. Okay, so here's the way I really look at it. If you're investing only for those 30 days in a 20-year period. And the odds of you missing those days are tragically high if you're not in the market. There is no way that any one of us can guess when those best 30 days in the market are going to be, let alone the best 20, let alone the best 10. So how do you avoid missing these top days? We need to be in the market, and we need to be in the market consistently, month to month or week to week, consistently. When you're deciding to invest, you're deciding to invest for the long term. You should not be thinking about, I need this money in the next year or less. If you're thinking if you need the money in the next 5 years or less, you shouldn't be trading in the stock market. If you're a long-term investor and you abide by these 4 pages in Tony Robbins' book, I can guarantee you, you won't miss those 30, 20, or 10 top trading days. So what we need to do is we need to do something that's called dollar cost averaging. In order to dollar cost average, you need to be consistently drawing out of an account, say your checking account, into a trading account, whether it's TD Ameritrade or Schwab or something like that. And then from there, you need to consistently buy stocks all the time. So for what I do, I usually take out a monthly amount into my TD Ameritrade trading account. And then from there, I usually buy a ETF fund that mimics the S&P 500. That way I know that I'm never going to miss these 10, 20, or 30 best trading days in the market. So that's really it for today's video, guys. Short and sweet. Thank you for stopping by. Please give it a like, thumbs up, and subscribe if you haven't been here before. Take care, guys, and we'll see you at the next video.